Genia Turanova, thanks so much for joining us again on Wall Street Unplugged.
Happy to be here again. Thanks for having me.
So I guess let's start with this, right? Because everybody hears my opinions through podcasts, everything with the markets and through Twitter and social media, everything. But I want to get your thoughts where we're still seeing a big disconnect between Main Street, who's struggling, and Wall Street, right? Where stocks just hit new time highs. And we know businesses and people are having trouble making ends meet due to the lingering effects of COVID. Some of these businesses are still closed around the States. And yet those stocks are hitting all-time highs. We just reached all-time highs with the S&P 500. So what are your thoughts on the overall market here? Because I know there's a lot of mom-and-pop investors, individual investors, retail investors out there that are pretty confused.
Well, I can understand that. It is confusing. But there's a few reasons for the market to be up. There are several reasons for the market to continue to go up. And there are several reasons for us to be a little hesitant here. But still, this can go on for much longer than many of us have anticipated, and even for optimists in us that currently do anticipate. Because what is happening here is that we are really drowning in the sea of free money. The rates are zero. The Fed had made sure that the rates were zero back in the beginning of spring. I think end of March, that's what they said. Don't worry, we're cutting it to zero. That didn't quite work. And then they came out and said, you know what, we're going to buy everything we can on the fixed market, the fixed income market. And that helped. The reason it helped because it showed not only that liquidity will be back in the amounts that the market is needed, it also showed that they will do literally everything they can for as long as it takes to support the market and the economy. But the economy is really, in this case, as the secondary function of the market, because markets must operate. Financial market must operate for the economy to operate. It's not the only condition, but it's one of the conditions. And now the Fed has continued to say, we will stick to the plan. We will keep the rates at zero. Don't worry about it. That will go on and go on and on. And the market knows it, and it will go on forever. So where else will we go? We can't buy anything else other than the best of the market, the larger cap stocks, and that's why mega caps outperformed. That's safe. The market is still looking for safety.
Now, speak about that safety, because we created a new product, Unlimited Income, which you write for us at Curzio Research, one of our biggest selling front-end products. When we say front-end, it's a very, very low price for people to afford it. I love people coming in and seeing your research firsthand. You got a lot of positions in there. I want to say probably at least 9-10 positions, and I think only one's down. You're doing fantastic. But one of the things that people seek, because of what you said, is income, right? Because interest rates are zero. It's very hard to get yield out there. And we created this product not to say, hey, we're going to recommend like the biggest names and just look at yield. It's almost like an unconventional way. It's not unconventional for some people, especially me, especially you, because this is how we view how you should buy income stocks. But talk about this product a little bit and how it differs from just the conventional thinking of everyone when, hey, this is an income product that you're just going to buy Intel at a 4.5% yield. It's much more detailed than that. But talk about limited income and a little bit about your methodology, because people are dying for yield out there. And they're nervous buying stocks at all-time highs. So I could see that they really need someone to steer them in the right direction.
Right. So yes, it's such a concern, and we will all really are in the same boat here. The S&P 500 yields more than bonds. Think about it. Just for the first time ever, the S&P 500 yields more than the average of corporate high quality bonds. can't really get anything else in the market that pays dividend or any kind of yield to you and has a potential to increase that payout. Fixed income has this name, fixed income, for a good reason. Once you buy it, the income is fixed. If you buy individual bonds, you have a promise of a return of that principal at the end, but the annual payout is fixed. Bond funds is a slightly different story, but let's stick to individual issues for now. They don't yield anything to speak of. High yield is slightly better in terms of income, but it's risky. The S&P 500, on the other hand, at least has the potential to grow earnings and potentially grow dividends. The trick is you know what to buy, you know where to look, don't go for the highest yield, and be very careful when you're buying, and be very careful during the sell-off, which at some point will come. Be confident in your choices, but be nimble enough to say, guys, I was wrong. The stock is not going to grow. These dividends are not going to increase anytime soon. This is a losing sector. This is a losing company. Let's give up. Let's reposition. Let's buy something else. You want your income. You also don't want to lose your principal.
And one of the things I'm looking at, because I have your portfolio up right now, is interesting because you're still able to find pretty decent yields. A couple of 3% yielders, even one at 4%, but some of them are 1.9. One is 1.4%. And I know people might say, well, this is an income newsletter. I want more income. But could you talk about the importance of those capital gains? Because that's, people don't realize when they say Buffett, he buys and holds and does great and compounds. And the compounding includes the capital gains. And that's why he became that. And plus, he leveraged through insurance and put more money into everything that he bought because he's very smart. But if you're really looking at it's the capital gains on top of the yield, where I think sometimes people just look at a 4% yield. And if a company's not growing or if the stock goes down 15% that year, that yield is meaningless. So could you explain why you shouldn't overlook a 1.5%, 2% yield or a yield lower than 3%, right, for income because of those capital gains and because of that growth?
Well, you want everything. Ideally, you want stock appreciation and dividends, because again, what you want the market to recognize that the stock you own can grow, and that's how this game is played. The winners get all the attention, the losers get dumped. And again, the high yielding stocks, they're in the process of being dumped, so many of them, because the market does recognize that these companies are in trouble. They can grow revenue. The profits are in trouble. The margin is shrinking. The business is in the wrong area of the economy, or something is wrong with the execution. And the market does see it before many of us or some of us do. And this is the way some of these companies are showing huge yields. You don't want those yields. You want the potential over future yield growth and capital gain appreciation. You have a capital gain appreciation. You have a higher stock price. You, in theory, can create your own dividend. You can sell a little bit of your stock if you need income, and act as if this is a payout of your stock. What's the difference? Money is money. Let it be called dividend. It will be treated differently, of course, from the tax point of view. But if your holding is long term, it really wouldn't matter too much. And on the other hand, it's whatever the tax treatment is, it should be the last of your concern, because it's better than losing.
No, it definitely makes sense. And I want to switch tunes here. And it's important for people to realize that, because I know when they see a yield product, it's like, boring. And, what are you going to buy until whatever? It's much more detailed than that, because you really have to focus on the growth. These have to be great underlying businesses that are growing. And unfortunately, with COVID, you had to be lucky. I mean, you look at Target and Walmart, the numbers that they just posted. I mean, 25% growth in revenue. Target just reported. You see massive growth of these companies, yet look at Kohl's. So there's a massive difference where some are okay and some aren't, where, but you want to have that yield with that growth potential, because that's how you really generate those massive gains, and also, with that income component. But I wanted to turn to Moneyflow Trader, because this is one of our newsletters that I love. It uses conservative option strategies to bet on stocks or bet against and for stocks. Where I say conservative option strategies, you'll buy puts to the point where you're only limited to that, to the amount you're putting in, right? You're not shorting a stock, and if you short one of these, Tesla or something, whatever, which is not the best example. I know that wasn't
but it is a good example. You really don't want to short Tesla.
Yes, I mean, these high flies, but talk about this product, because the reason why I created it is I always looked at it as a hedge, right? Because the market is risky. This is a place where I would look at it as putting 10% of your portfolio in, meaning that if the stock market's surging, you're going to see some losers in this, but the rest of your portfolio is going to be doing fantastic, because you're probably long that 90%. Yet, if the market does come down, that small 10%, which you showed in February and March in some of your positions, some of those positions could go up 3x, 4x, 5x, 500% gains. And I think that people understand using that. It's almost like an insurance type thing. Talk about that product a little bit, because it's really something I love, and it just complements what we do here.
Actually, I do think it's like insurance. It doesn't pay, and doesn't pay. And eventually, ideally, you really don't want it to pay. But considering that this is the stock market, we all know that it will never go up in a straight line. It will eventually pay. Unlike your car insurance, that I wish you will just pay in and you'll never get a pay back. But with this product, just like 6 months ago, or 5 months ago, I am confident. No guarantees, but I'm confident that this kind of insurance policies will have some payout, and depending on the situation, depending on the way we play it, this payout can be very significant. And in any case, this is what allows you to stay invested. If you know that you are protected, you can go long. You can be in the market if you are free of fear. And that's having those protections with puts. Having that protection with puts is one part of our strategy. And when we realize that the market is really full, such liquid, and the Fed is not going to stop in helping the market in the all possible level of liquidity is out there, and all the liquidity is unleashed, we've added liquidity place. So even though it's a protection insurance kind of newsletter, they actually made a pretty decent gains, triple digits gains already this summer, playing on that opposite side of the market, on the bad liquidity.
Now, talk about those trades, because this is important to realize when we say, hey, this is insurance space. But even when we saw this product, for me, I never want to handcuff any of my editors, because I was handcuffed when I had a Stocks Under 10 newsletter for thestreet.com. And there was stocks at 13, 14, 15 that I loved that went to 60, 70. But because of the way the newsletter was mandated, it's under 10. And then, I switched that and said, okay, listen, you want to be able to look at the whole entire market and go long or short. So you took positions in gold and silver, and everyone can say, oh, I own gold, and now they do. But when the position that you took a couple months ago in terms of options, where if people just bought the underlying ETF that follows the spot price of gold and silver, yeah, they would have been up. But talk about those two trades, because using your option strategies, like you say, you locked in very, very big gains on these. At least the silver trade, the gold trade, I believe is still open. You're doing fantastic on. But talk about those two trades, and maybe take us through a trade. Like, actually, how did you do the silver trade, just so people understand it? Because it's a lot easier. People hear options and they get nervous. It's very simple. You go on your E-Trade account and you could do it, and you tell them exactly what to do and what to buy. It's pretty easy. But why don't you take us through that silver trade, because the timing on that was really, really good.
So silver is slightly different from gold because it's industrial metal. It's precious metal, but it's industrial. And these dual quality of the metal is one of the reasons that it's been lagging gold for so many years. Looking at the Fed's liquidity, it seemed to me that it was finally silver's time. So we took a position in silver. I think we took a couple of positions, in fact, before it rallied. We did it, I think it was in May and June, and silver really took off at the end of June. Have you done just straightforward silver play on the metal, on the silver ETF, SIL? Oh, I'm sorry, SLV, not the silver mining. The silver ETF that represents physical metal. You would have been up 50%, depending on the entry point, maybe a little bit more, maybe a little bit less. We booked 200% plus gains on each trade. So we did it in 2 steps. Every time I explained why now, why do it slowly, and how. And then when the time came to take the gains, well, again, I explained why now is the time and how to execute. I'm looking at the closeouts right now. So one half we closed at the 265%, and the other we booked a 220% gain. Again, this is the power of leverage. The underlying security, the silver ETF, was up significantly less than the call that we're invested in.
Yeah, and I appreciate you finding it, because I know, for me, I just ask questions off the cuff. So I appreciate you going back in that trade, just comparing it, because I know you just did that all the time. And so, okay, if you did the ETF, so no, I appreciate that. But you look at 200% plus gains compared to 50% gains, right? Using these option strategies, and you're still in that gold position. But just going through that process, and I love the fact that you really explain in detail in writing how to do this. It's been tremendous for investors. We always get positive comments on it, and I appreciate that, because sometimes it's a big component in what we do when you're talking to retail investors. I mean, these are people who are learning things for the first time. These are people who have jobs in every way, and they're very successful in their jobs. But this is what we do, where if you don't understand it, you're not going to make money off of it. So going through that extra process, I really appreciate your writing, which is fantastic. And I guess we'll end with this. Everyone always loves ideas, maybe on the income side, or do you have any ideas to share that maybe people could buy right now?
Considering that we're talking about precious metals, I like silver. Used to be a silver streamer, but now it's a precious metals streaming company, Wheaton Precious Metals, WPM. It's in the business of essentially buying the byproducts of other companies, of other mines that are not precious metals mines, and are selling it as its primary business. So it's a precious metal company, but it's not a miner. Not the highest yielder, and because of the price appreciation this year, it yields less than 1%. But it's a fantastic way of getting some yield, getting less risk than the miner, and benefiting from potential appreciation in the gold and silver.
And any more to share that that you might be able to share? I think everyone's going all in on gold right now and all in on silver. So I can see these things appreciating. But I know that you love sharing ideas. So I'm going to try to get at least one more out of you. So let's see if we can.
More?
One more. Let's get one more.
Okay. Sure. Let's do materials again. I like another material stock, but it has nothing to do with gold or silver or even oil and gas. It has to do with industrial production. It's actually an industrial gases company called Air Products and Chemicals, one of the leading industrial gas companies in the world. I like it because it's dominant. I like it because it's important for everybody else. So whatever is happening elsewhere in the economy, we will need manufacturing, we will need refining, we will need green economy, which is hydrogen, which is APD is working in, and it does yield a bit more than the written yields right now, yields 1.9%. In January, it hiked its dividend by 15%. It was the highest dividend increase in the APD's history. Of course, it was back in January, but still, it is an extremely strong company with the significant potential.
No, that's great. And I know those are two positions that you have in your portfolio that you're also doing well in, and you think they're going higher. So we're not giving away free stuff. These are positions that if you're a subscriber, you do very well in right now. But I know you still like them. And APDs, Air Products and Chemicals, guys, and Wheaton Precious Metals, WPM, if you're interested in taking a look. So, Genia, like always, I love when you come on. I'm getting so many good emails about your products and how good you're doing in them, and just how you're educating investors. It makes me really proud. So I just want to say thank you for all your hard work. I know how hard you work. You're a market junkie like me. You love this stuff. It's probably not even work to you, but I really appreciate the job you do, and I know my subscribers do too. So thank you so much for coming on.
Thank you very much, and thank you for all the nice words and kind words that everybody writes in. Thank you.
All right. Take care.
Bye-bye.
Okay, guys, great stuff from Genia. And I love the fact that she does interviews on my podcast. She also spoke at the Money Show event. She doesn't like to do these that much because English is not her first language, right? So it's easy for her, and it's tough for anyone, right? Going in front of a crowd and that's not your first language. Sometimes it's difficult, as you could hear on that. Don't mistake that for how smart she is or her newsletter, because you probably even know this. She actually taught economics in the Ukraine, probably the best place to teach economics with the inflation rate exploding and going over different things that you don't really see in the U.S. that are a lot easy, right? A lot of our numbers are transparent. Some of the other places they aren't. But she's been a teacher, a great teacher. And you could see that in her newsletters. And that's why we get so many positive emails, because even when she's wrong, you're going to see what to do with the position. She explains option strategies very simply in her newsletter. And right now we are offering a very big discount on limited income, which is available to you listeners. You can go to our website, get that special discount. There's also a link at the bottom of this. But for me, I lowered the price. It's basically one of our lowest price subscriptions. And we are independent. We don't get paid by anyone. So the fact that we lower this price is for me to show what Genia could do. And once you see that, that leads to you buying maybe other products from Genia, right? That's the way it works. For me, I'm a show you person. I'm not a tell you person. I actually have to promote her because she doesn't like to do this part. And the reason why I'm promoted is because she's making people money and she's doing great. And that's what I want. I want to put great people in front of you. That's why you listen to this podcast. So the annual subscription for this is very, very affordable because I want everyone to see Genia's research firsthand. So really happy because we launched this a few weeks ago. We had beta versions, which is why there's so many really good stocks in newsletter already. She's doing fantastic. But the emails that we've gotten have been fantastic, and I wanted you to see her research firsthand, because once you do, people become subscribers for a long time. And this has been one of the best-selling front-end newsletters, low-price newsletters in Curzio Research history. That's how many people took advantage, and that's why people are so happy. Again, it's 9 out of 10 stocks are up. Past performance not indication of what's going to happen in the future and all the disclaimer bullshit, but you could see from the performance, you could see from her research, and you can go back and look at the issues of how much research she does behind all of her picks.